This is the trade I took recently on AUD USD. It was a rejection trade, meaning that it was in a critical zone, which we'll see in the video. I drew a purple box, and then on the bottom where the support was, there's also a zone. I was taking my profit just above that. The reason why I took it is because, as you can see in the video, for the past month, it's been in this zone. It's been in this range, kind of consolidating with these high swings and high lows. So I'm hoping to capitalize off of that. It's not a big money trade. I haven't traded in about 2 months because I've been really busy with my job. I am a photographer, so I've had a lot of weddings, seniors, real estate. I mean, it's just been nonstop. So I trade light just to get back into it. I like to trade with real money because the psychology is there. When you paper trade, it's good, but you have to be in the mindset, which is very tough because it's fake money. You can just really trade whatever you want, not really have that much discipline, and sometimes you win, sometimes you lose, but it doesn't really affect you as it does real money. So as you can see, like I said, it's going to be a very small money trade, but again, when you get back into it, you want to kind of trade light and then work your way up as your process grows and as you become consistent again.
All right, this is AUD USD. This is about 512. Not a great time to trade, but this is what I'm working with. Took a trade in AUD USD because there's a lot of resistance in this zone, in the purple zone that I drew. If you look back, it goes back a ways. There's support over here. There's resistance, resistance, resistance. There's a rejection right here, and it got rejected again. I had a little FOMO on this one. That's why I took it so abruptly. I mean, it wasn't abrupt. I've been watching it all day as I've been doing work on my phone. So my target is right down here in this level, maybe 63,192. 63 is a psychological level. It's whole. There's also a zone that it has been touching since last month. So I'm hoping to get this trade. It's a swing trade. I'm not going to close it early. Whatever happens, happens. My stop loss is obviously above all of these rejections. So if it does go up higher than this zone that I drew, that means that my trade was not good. There'll be confirmation that it was a failed trade. But that's why we have stop losses. So we'll see how it plays out. Alright, so this is the end of the trade. This is where I got stopped out right around here, which is fine with me. Again, this is all being recorded so I can learn from my mistakes, learn from my trades, my wins, my losses, and move on from there. So really, I want to point out that yes, I got stopped out. It was in that zone, but there was also a longer trend. We'll go to the daily. And as you'll see, I drew some trend lines on some key points. And price is actually bouncing off. If you've noticed this, it's bounced off quite a bit from this trend line. Now, one thing that I did not do, kind of did, but I should have done more, is a top-down analysis. Because on the 4-hour, as you can see, I entered with a very bullish candle. And again, it went very bullish again. Consolidated, tried to move up past that trend line, as you can see over here, from roughly a month ago. We tried to do the same thing. Very bullish engulfing candle. This is a very bearish sign. And as you can see, the RSI is actually on the downward move. If we go to the hourly, again, same thing. Rejections left and right. 15-minute, again, rejections. And then down to the 5-minute. So again, I like to see my trades either lose instantly or in the green instantly. I hate for it to consolidate. If it consolidates a little bit, I will get out of the trade because you have no idea where it's going. I like to see breakaways, breakouts, I should say. I like to see consolidation into breakout. And as you can see, this was consolidating for quite a bit. And it broke out to the upside, and it's been in this upward trend. Right now it's consolidating. It could move higher, it could break out again, but it could also move lower back into the zone. Maybe this can be support now. Again, you just watch your trades and manage them correctly. Always journal your trades as well, because if you don't journal, you will never learn from your trades. It will just be gambling, and this is calculated risk. Again, I risked a little bit to maybe earn a lot. I think the risk was 1 to 3, maybe 1 to 4. I'll have to check. But yeah, that was the trade, and we're going to learn from this and move on and get better.
As you can see, this chart matches perfectly to what I was just trading. And again, if I saw this earlier, maybe I would have recognized it, but it's all about pattern recognition. And again, you just learn from your trades. You document, you look back, just like an elite athlete, and that's what Bella always says, that elite athletes always go to their tape, they watch what they've done wrong, and they improve on that. And that's what you kind of have to do as a trader. You have to document everything and really understand where your mistakes are. And just like this is a classic cup and handle pattern. So cup and handle is a bullish sign, but again, it's something that you kind of have to really train yourself on. And it's been 2 months for me since I've been involved in trading, so I've been a little rusty. And this is why you have to come back and really document properly and ensure that you're not risking a lot on your first time back.